Bank of England's Monetary Policy Committee have held the base rate for the third successive time today at 5.25%, which might come as a little bit of a shock to some people considering the economy looks a little bit better. Recession has been avoided in the UK at the moment, and inflation has come down quite a lot recently. And let's not forget that the average price of a mortgage has also decreased quite considerably over the last couple of months. So with everything positive going on, why have the Bank of England not brought the base rate down? Well, that's what we're going to talk about in this video, so stick around. Hi everybody, welcome back. It's Sam here. Now today we are going to be talking about the news that the Bank of England have held the base rate at 5.25% today, the reasons for that, and of course I couldn't finish a video being a mortgage broker not talking a little bit about the implications on the mortgage market. But before we get into it, if you could do me a humongous favour and please hit the subscribe button and the notification bell. This really does help me grow my channel. I'm on a mission to try and get to 5,000 subscribers, so a little click for you means a hell of a lot to me. Now let's get back into it. So the Bank of England held their base rate today at 5.25%. As I said in the intro, this does come amid a lot of positivity that's going on in our market at the moment, which is that inflation is down, we have avoided recession, and of course the average price of a mortgage has also seen a little bit of a dip recently. So there were a few amongst us that maybe were thinking that the base rate might come down. Well, to be perfectly honest with you, that was never actually going to happen. The governor of the Bank of England, Andrew Bailey, as little as literally a week ago said, let's not get too excited and carried away with some of the positivity going on in the economy because we are entering a prolonged period of high interest rates. And I think prolonged is maybe an over exaggeration. I think possibly sometime next year we will see a decrease in that base rate. But in spite of all this positivity, I think the Bank of England have made the right decision. Now, if you think about the fact inflation has come down recently, inflation being anything above 0% still shows that the average price of goods is going up year on year. Don't forget, the rate of inflation is the percentage average increase in those goods year on year. So with it being, at 4.7% at the moment, that means that the average price of goods is 4.7% up on what it was last year. So we still need that to come down, and the base rate is one of the best tools that the Bank of England have in order to do that. The higher the base rate, the more it costs to borrow money, the less inclined people are to borrow money, the more they're inclined to save, the more less inclined they are to spend, and that's basically the mechanism as to why this whole kind of base rate versus inflation thing works. Now, I did promise to talk a little bit about mortgage rates as well. So we have seen a decrease in mortgage rates recently, and that has been because we've seen a lot of positivity in the economy, which has had a knock-on effect in what we call the swap rates, which are the interbanking lending rates, which has led a lot of lenders to be able to lend money out a little bit cheaper. But to be perfectly honest with you, overall, the cost hasn't changed too much because a lot of lenders that are reducing rates have reduced their fees in order to continue making the same amount of margins. But with the base rate staying the same, are we going to see a halt in more average mortgage rates from decreasing? Well, look, I'm not here to tell you that we're about to enter a period of wholesale sale changes in mortgage rates, but certainly I think there is still an opportunity over the next couple of months for mortgage rates to come down. There are a couple of reasons for this that maybe you might not have thought about. The big one at the moment is that we're entering the end of the year, and there are a lot of lenders out there that haven't hit their annual targets. In order to achieve those annual targets, they are having to reduce rates in order to entice new people to come to them and to take out their mortgages rather than go elsewhere. So that's why we've seen the likes of LendInvest over the last couple of weeks reduce their rates down to 3.99%. One of the first specialist lenders to go below 4% in months. Having spoken to the people at LendInvest, I know the reason is because they want to get some money out the door before the end of the year. Now, does that mean that going into 2024, this is going to change and everything's going to kind of be reset going into the new year? Well, actually, no. And again, there's a good reason for it. Many people are predicting that we are going to see a decrease in the average cost of a mortgage in 2024. And that's actually because we're expecting that the property market is going to contract a little bit. And history tells us not only do fewer sales happen during a general election year, of which we are about to enter, but also just because of the market as it is at the moment, many are predicting that fewer sales are actually going to go ahead. We have seen a dramatic increase in the average asking price over the last few months, and this I think is only there to show that there are fewer buyers in the market than there were this time last year. With fewer buyers in the market and probably the same amount of stock in the market, and that's actually increasing because it's taking longer to sell because people aren't buying. that is actually just going to mean that we have overall less mortgages being taken out in 2024 than we have seen in 2023, 2022, and certainly 2021. Now, mortgage lenders know this. They're not stupid, contrary to what a lot of my clients seem to think. So they know this already and they are planning for it. They know that the market is smaller. They know that in order to get the money out the door they want to get out the door, they are going to have to do something a little bit more dramatic. And the way in which a lot of these lenders are going to do that, of course, is not just to sort of make tweaks to criteria and things like that. They are more than likely going to try and reduce their rates a little bit. It probably means they're going to take a little bit of a haircut on their margin, but getting some money out the door is better than getting no money out the door. There's going to be a lot of competition between lenders next year, particularly in the more specialist side of the market, I think, that will lead to a bit of a price reduction. Now, please don't get ahead of yourselves and think we're suddenly going to be seeing loads of rates at like 3.1, 3.2, 3.5%. That's not what I'm talking about here. I just think there's going to be a few more lenders that join the sort of below 4% club, which I think is only good for not only just buyers, but also property investors as well. But I don't think it's going to be a huge dramatic decrease, which is then going to lead to the property market exploding because suddenly we're going to have a load of more people that can afford to get mortgages. That's not what we're talking about here. We're just talking about a maintenance really of the market with a little bit of decrease here and there, and essentially just trying to make sure that we're not all getting scared that something similar to what's happened this year, where we've seen with the base rate so high, mortgage rates follow suit. That I don't think is going to happen. I think we have topped out in terms of where the base rate is going to be, and I think for the time being, the mortgage rate has found a nice little equilibrium as I see carrying on into next year with a little bit of decreases where we can. Certainly the first quarter next year is going to be really, really interesting. I'm really interested to see where inflation is going to go. I think it's probably going to hover around where it is for a couple of months and maybe then see another decrease. Will this then have a positive impact again on the mortgage market? And come March, we see another new milestone. Maybe we see the first 3.5% mortgage rate come out to the market. Who knows? Certainly, I don't think we're going to see a base rate decrease until the summer, May, June at the earliest. And of course, then it's probably going to only come down to 5%, which isn't going to have a huge impact on the market. It will send a nice positive signal out there, but that pretty much will be it. But I am really interested to hear what you guys think. Join me in the comments for a bit of conversation on this. Firstly, do you think the Bank of England were good to keep the base rate at 5.25%? Let me know. And secondly, where do you think mortgage rates are headed? Do you think we're going to see a massive decrease going into next year, or do you think we've pretty much found a new norm for the next 12 months or so? Let me know in the comments. I'd love to hear your thoughts. Now, if you've enjoyed this video, guys, you are probably going to love a few more of my videos. In fact, YouTube is working away at the moment to figure out which one of my videos is best suited to you. You're going to see a recommendation any second now, so click on that, check it out, and I'll see you on the next video.